considered by an auditor while conducting an audit of company? Actually, company audit is a important area from the side of auditor when he is going to do the audit work in various types of concern, because it is a statutory audit. Statutory audit means every company has to be get his accounts audited, whether they are suffering loss or earning profit. So, points to be considered by an auditor while conducting company audit. All these are consist items contained in balance sheet, whether it is liabilities or asset side, and the items of profit and loss. So here we will discuss main items of asset side, liability side, and also the main items only from the profit and loss account. These items should be very carefully checked by the auditor at the time of conducting company audit. So let me start from the balance sheet, and the first topic is share capital. Auditor has to check whether there is any change in shareholders pattern. If yes, obtain the certified copies of the relevant resolution that promote the change. Resolution passed at the meeting of board of directors, meeting of shareholders, that authorizing the increase or decrease in authorized share capital, or if in case there is any change in the paid up share capital, then certified copies as a proof is also required in this case also. In case of change in capital, verify whether paid up share capital as at the year end is within the limits of authorized capital or not. If there is any violation of the limit, then it should be mentioned. It should be observed and write down by the auditor or his staff in the audit file or audit note. He have again check and obtain and verify copies of forms filed with MCA, Ministry of Company Affairs. There are various types of forms for various types of companies. Suppose form SH7 for increase in authorized profit, form PAS3 for increase in the paid up capital. So each and every type of form that has been submitted by the company towards the MCA or RBI should be checked by the auditor, and verify number of securities issuing along with the issue price. So an auditor is expected to verify the share capital with the proper duty, as it is the funds. Next is share application money. If auditor find that there is any receipt of share application money during the year, obtain copies of share application forms to evidence the receipt of share application money, whether share application money received in cash or through the bank. But auditor have to verify that actually share money has been received and really it accounted for in the books of accounts. Next is secured loans. For secured loans, auditor is expected to go with the various aspects. First of all, the auditor have to obtain a list of secured loan outstanding at the year end and security details against the loan, because secured loan always be raised on a security. So security detail, so security put against to raise the loan should be checked by the auditor. We have also to check that whether resolution has been passed for loan in a board meeting or general meeting as the case may be, and compliance with the section 179 and 180 of the Companies Act 2013 should also be checked by the auditor. Whether new secured loan obtained during the year, obtain a copy of the resolution authorizing bank borrowing with the compliance of section 179 180 of the Companies Act 2013. Also, in case of secured loans, we have to check whether the client violates any term of repayment of the loan. If yes, please prepare a list of EMI bounced, interest unpaid, and period of defaults. Whether term loan has been used for which it was obtained. Means term loan is raised for a specific purpose, then it should be utilized to the stated purpose only, not for any other purpose. Whether the loan is taken from any non-banking financial corporation or any institution other than bank, then auditor have to check TDS is deducted on the payment of interest payment or no. So secured loan have to be very carefully checked by the auditor while doing the audit of a company. Regarding unsecured loans, there are again the duty of auditor to obtain a list of unsecured loan outstanding at the year end and ledger accounts of all the loans to be extracted. With the help of ledger scrutiny, auditor can get a deeper knowledge regarding the unsecured loans. Whether the company is having debentures in its books of accounts or issued during the year, then auditor have to obtain necessary documentation regarding the debentures. For example, debenture holder agreement, debenture holders registers, conversion ratio, and other information. By this way, the auditor can check or verify the unsecured loan under the audit of a company. Duties and taxes, they should also be verified by the auditor, specifically in the case of audit of a company. What type of duties and taxes? First, TDS. Obtain a copy of TDS challans about liability outstanding as on the last day of the year and also previous year's liability. Auditor have to obtain TDS return form 24Q, 26Q, 27Q, and 27EQ for all the quarters in consolidated file from the presses. The auditor should calculate TDS liability in total and its payment by the 7th of every month. The company has made any TDS default during the financial year, see presses website for default. And auditor also have to check interest on TDS and TDS delay payments, if any, and also check the calculation of them. So under the duties and taxes at the time of doing the company audit, an auditor should be very carefully check all these points. Then what about PF and ESI? An auditor is expected to check applicability and calculation of contribution of employer and employee with their percentage and calculation. Obtain copy of all challans, returns, computation to be tallied and reconciled. Check applicability and calculation. Obtain a copy of all return computations to be tallied and reconciled. So, in case of PF and ESI, PF Provident Fund, ESI Employees State Insurance, the auditors should check all these points. Regarding the GST, reconciliation of GST return 3B or GST returns with books accounts. regarding output tax liability and input tax credit obtained. Auditors should review whether the company has made payment to its vendors within 180 days from the date of invoice on which the company takes ITC. Copy of LUT to be obtained for the year under review. Reconciliation on input credit, invoice wise with GST return to A to be obtained. Reconciliation of sales, service income, income wise as per books with GST return 1 to be obtained. By considering these points, GST can easily verify by the auditor. Trade payable. This is also an important area that should be checked by the auditor in company. List of creditors at year end should be obtained by the auditor. List of creditors having debit balance as on the last date of the financial year and reason for debit balance should be there. Inquiry should be put by the auditor towards the client regarding the debit balances of the trade payables. List out the owed balance and non-moving balances, if any there, and whether they are payable or not to be discussed with the client. Regarding the trade payable, the auditor have to obtain balance confirmation as on the last date of the financial year. Whether any creditor filed a legal case suit against the company, details from management and legal status of the case and relevant documents for the matter. What was the reason behind to file a case? What is the exact position and in what stage the case is existing? All the information should be gathered by the auditor from the client. Whether advance to supplier made during the previous year is existed in the current year or not, reason thereof, and copy of agreement with a supplier for such advance to be reviewed by the auditor. Regarding creditors against expenses, it is expected from an auditor that we have to check the following: whether any expenses are due on 31st March, but payment is to be made after 31st. Whether the proper provision of such expenses is made at the year end or not. Suppose for salary of March month, due is made by the company. In this way, creditor against expenses can be checked by them. Provisions. Computation of provision for gratuity where employee limit exceeds 10. Whether actuarial valuation is obtained by the client for the same or not. But I have to check whether the company has got registered its gratuity trust with the income tax authorities. Disclosure of requirement benefit to be done in notes to accounts the balance sheet. Whether the company does leave encashment, please obtain a copy of leave policy if any. Actually, all the type of employer maintain a leave policy, hard or liberal as the case may be, that should be procured by the auditor at the time of verification of provisions regarding the leave encashment. The company makes provision for encashable leaves as per its computation or actuarial valuation. The auditor have to see the difference between both. The auditor is expected to check whether the company has invested such funds from provision created in any investment or no. If not, then reason should be there. Or if no investment is there but amount is used for some other purpose, then the minutes of the meeting may be checked. Regarding deferred tax assets or liabilities, The auditor working of opening deferred tax assets oblique deferred tax liability to be verified its reversal items if any. Computation of DTA oblique DTL as of end of the year, that is 31st March for the year under review, to be computed in last. Now, some items of asset side should also be discussed that should be taken into mind at a time of an audit of a company by the auditor. In the asset side, first we discuss the fixed assets. Regarding the fixed assets, following point should be taken care by the auditor. List of additions in fixed assets during the year under review and copy of each invoice to be obtained from the client and to documented and copy of ledger to be taken. Regarding this transaction, journal entry and ledger posting should be checked by the auditor. He have to obtain updated fixed asset register as on 31st March. We have to check whether any type of physical verification has been made by the company or not. If we find that there is any verification is in physical form and as per books, whether the proper entry is passed in books or not. Regarding depreciation, we have to be very calculative and check the calculation sheet and methods of depreciation used. Is there any change in the method of depreciation? If yes, then ask the reason for the change and effect of that change on profit and loss account or the state of business. We have to check whether any decrease or increase in the value has been adjusted correctly in the books of accounts due to a change in depreciation method. We have to check whether residual value is 5% in all cases of fixed assets. If not, we have to check a specific reason for this. The auditor is expected to check that the useful life of assets complies with the schedule of Companies Act or not. If not, has the company obtained technical advice for the same? If he finds that valuation is maybe over or under in balance sheet of assets, then he can measure that or he can also get the experts advice on that. If any part of fixed assets has been sold during the year or a new addition during the year, then for the calculation of depreciation, which time duration have to be considered will be checked by the auditor. Next item is investment. In case of investment, the auditor should obtain a list of all investment held by the company. Maybe there more than 1, 2 or 3, 4 investment. In respect of investments in shares, verify the year's balance sheet under audit in respect of invested companies. In case of investment in listed shares, copy of all contract notes from the broker to be obtained. In case of capital gain or capital loss computation to be obtained and to be tallied with the books of accounts. Whether investment in shares in any related party complies with Companies Act 2013 or no. These points should be checked by the auditor regarding the investment. Next is sundry debtors. Sundry debtors. Sundry debtors means the amount to be recovered by the business from its debtors that has been created by the company on credit sale. Auditors should obtain the list of all the debtors. Then he have to obtain the list of debtors for receivable more than 6 months from the due date of invoice and less than 6 months from the due date of invoice. He should ask about the copy of agreement with significant debtors. Is there any credit policy in writing? Basis and limits up to which credit sale can be contracted should be checked. Debtors more than 6 months are doubtful. If yes, make provision for doubtful debts or bad debts as the case may be, and the provision should be in a proper manner as per the trend of the industry. Is there any procedure for obtaining balance confirmation and reconciliation of customers' account at periodic intervals? If the client is capable to get confirmation and reconciliation of customers' accounts at periodic intervals, then to maintain Sunday creditors is very easy for the client, and to check the Sunday creditors is very easy for the auditor. Whether there any receivable which has been written off during the year with the approval of management, reasons to be checked or not by the auditor. Subsequent realization from the debtor post March 31st up to the date of audit to be obtained invoice wise. Need to review whether the company receives amount receivable from the debtor as on 31st March in subsequent years up to the audit date. The calculation of depreciation should also be checked by the auditor in case of significant amount of depreciation. Now, loans and advances. This is the part that loan is granted by the company to the others. Company is granting the loan and advances. Okay. Is there any loan granted to directors? If yes, obtain the list in a detailed format. Loan cannot be given to director and any person to whom director is interested as per section 185 of the Companies Act 2013. This provision has to be checked by the auditor in detail. Again, whether loan has been granted to related party and relatives. Any loan has been given to shareholders or any other person under section 186. Is there any violation of this provision of the Companies Act? Actually, company governed by the Companies Act. So, in each type of assets or liabilities, when we are going to conduct an audit and going to verify them, then should be checked by the auditor very carefully. Board resolutions, copy of loan granted to any director and persons whom director is interested as per section 185 and 86 of the Companies Act 2013. Caro report should also be followed. Provision of section 2, section 22 clause E applies to company. If yes, work out the amount covered under this section. The auditor have to check whether board of director and copy of arrangement appropriately authorized loan and advance made to other or not. Suppose loans and advances are made to others, whether good interest or return received from such party, TDS directed by party reflected in 26 AS of the company. In case of default in repayment of principal and interest on loan and advances, whether the company takes proper action against the party. Is there any charge in form of interest or late payment of installment? in the favor of the business entity or business concern, the auditor should be very straightforward to check the loans and advances while he is doing a company audit. Next is security. In case the company gives security to the party, obtain a security agreement from the party. Verify security is refundable or not. Verify the agreement, whether there is an agreement regarding return on security and such return recognized in the books of account. So regarding the security, all the aspects have to be checked by the auditor, and transactions should also be examined by the auditor for the proper verification of security under the head audit of the company. Next point is advance to employees. Advance to an employee is appropriately authorized and adjusted adequately from the salary. Check whether advance adjusted in case of employee resigned the company. Obtain balance confirmation from an employee regarding the closing balance due to the employee. In all type of advance to employee, the auditor may obtain balance confirmation from the employees as per closing balance. Now, next term is balance with the revenue authority. List of amount receivable from revenue authorities and verify its recoverability. Check whether income tax refund of any preceding year is processed by IT department and matched. This may be verified by the income tax website. Obtain copy of advance income tax challan paid. Check availability and possibility of any refund due from government. So regarding the amount of transactions, whatever has been done with the government, the auditor should go with a proper check. Now, TDS receivable. Reconciliation of TDS and service income and interest as per Form 26 AS. Profit and loss account and its respective TDS receivable. Both have to be checked. Now, prepaid expenses. Opening prepaid amount available in the books. Expenses during the year or not. List of prepaid expenses means computation or prepaid expenses. So these aspects regarding the prepaid expenses, an auditor is expected to check. Next is cash. Checking of cash. Checking of cash of company at the time of audit. This type of lines are sufficient to discover the matter. Yes, state the periodically for keeping denominations wise detailed by the cashier, whether at the closing as on 31st March. So the auditor have to be kept always cash at the authorized place and should maintain all the entries regarding the dispersal and receiving of cash. Cash expenses more than 10,000 to one party in a day is not allowed under section 40 capital A3. Income tax and tax, income tax. Cash receipt of more than ₹2 lakh from one party in a day is not allowed under section 26(9) of Income Tax Act 1961. So the excess payment or excess amount which is not allowed straightforward that should be noted by the auditor or his staff in the audit notebook. Are cash collections deposited into bank daily or every week or another day of the week? It should be checked, and improvement to manage it will be provided by the CA. Daily closing cash should have debit balance. It should be checked by the auditor. Cash balance should be signed by the auditor, means with a sign certified by the auditor, and certificate to be obtained also from the cashier and director as well as on the 31st. Means prime facie is the liability regarding the cash is from the side of management itself. But all the proper due care to maintain the cash, to check the cash carefully, should be taken by the auditor at the time of checking of the cash item under the company audit. Next is bank. Bank means company having a bank account in a bank, and bank provided him checkbook or passbook for the convenience of account operation. In this case, the auditor have to prepare reconciliation details. Second, bank confirmation in original to be obtained as March 31st in respect of current account balance, fixed deposit balance, loan outstanding balance, and interest accrued thereon, if any. If in case of check deposit but not credited by the bank for more than 3 months, furnish detail of the date, party's name, and amount. Because more than 3 months date, check is called as outdated check. In case of checks issued but not responded by the bank for more than 3 months, whether they are transferred or unclaimed deposits or entries are reversed, all these points have to be checked by the auditor at the time of bank audit. Next term is inventory. This is the most important item of the asset side of a business concern. The auditor have to check or examine whether physical verification of inventory is conducted at regular intervals. If yes, report of the physical verification should be required by the auditor. Whether the proper entry has been passed for any variance in books of accounts. Any type of adjustment should be done by the accountant with the help of accounting policies, and regarding this, an auditor is expected to gather the information. Whether inventory has been shown on cost or net value, whichever is lower. The valuation is based on this concept proposed in accounting standard 2. If there any of non-moving stock or slow moving stock, if yes, then a provision is to be made thereon or not. NRV test. Finished goods oblique traded goods to be verified by its selling price post March 31st with cost taken on 31st. If SP is low, then NRV should be done. Invoices for few major items and few non-moving items to be obtained and documented by the auditor. Sometimes FIFO basis test. Value of stock to be verified with latest purchase price. Valuation cost should be equal to the value based on the FIFO. Direct cost. FIFO biotest. Direct cost such as inward freight, electricity expenses in case of manufacturing concern are being considered in evaluation of inventories or not. FIFO basis test. value of stock to be verified with the latest purchase prices. Valuation code should be equal to the value based on the before method. Whether inventories contained any stock transfer from the branch office of the company, whether any markup is embedded in the valuation of inventories, both are checked. Last, quantitative details of principal items of goods traded. Okay. So, inventory will be checked by the auditor in a very strict concept, so that actual information, actual data he have to be gathered. After inventory, now we will discuss the profit and loss accounts. Profit and loss accounts. Profit and loss account. First item, that is revenue from operation. Regarding this, retail is expected to obtain invoice-wise sales register, checking of GST compliance on advances received from debtors, and whether a proper entry has been made regarding this in books of accounts or not. Copy of invoices at least 15 to 15, at least 15 to 20 to be obtained from various months for records. Copy of agreement with customers to be reviewed and to be reconciled with milestone invoicing for that year. Unbilled income to be computed himself by the auditor or his staff for the verification. Copy of sales invoices and its delivery acknowledgement from the customer or freight receipt for the last week of March to be reviewed in respect of cut-off sale transactions. If sale has been made on the basis of return, then it should also be checked by the paper per important. Sale on hire purchase, sale on EMIs should be properly checked by the. Then FD interest income. If some amount has been invested by the company in FD, then we have to obtain interest certificate from the management. Calculate the accrued interest on FD if any. Whether proper TDS receivable book is booked or not, we have to check the bank provided the interest in the separate account of client, or it will be reinvested after a stipulated time. And TDS regarding the interest payment have to be accounted for by the accountant and should be checked by the auditor also. Next, in dividend income. If auditor have some investment in shares, then dividend income may be there. So, auditor verify the holding through the demat account. The name, title, and use of demat account should be verified by the auditor. Who is the actual beneficiary and whether an investment is in the name of company. This point should be very carefully checked by the auditor. You have to check the bank statement on which the dividend income was received. And TDS on receiving of dividend should always be verified. Always. Profit public loss on sale of fixed assets. In case of fixed assets, we have discussed that any addition, any deletion or sale of part of a machine should be accounted for and checked by the auditor. Same. When auditor finds that on a sale of a part of assets or fixed assets or machinery, if he finds that some profit or loss is there, then he have to get management approval for selling or disposal of big assets and account for of the proper treatment of profit earned or loss suffered on the sale of fixed assets or any part of fixed assets or any of the assets. Next is discount received. Regarding the discount received, the auditor have to check whether discount received booked by any debit note or based on agreement policy or not. The auditor should go through the agreement with a vendor to understand the discount policy. Whether proper entry has been made in the books of accounts for the discount received or not, it should be checked by the auditor. And the rate or percentage of discount will always be confirming by the auditor to the main or principal amount due towards the debtors. Foreign currency fluctuation. An auditor is liable, if is required there, list out the outstanding balance at any year end regarding the foreign currency fluctuation. He have to check the agreement, he have to check the various times rate of foreign currency exchange for the proper verification. Next item is purchase. Regarding the checking of purchase during audit of a company, the auditor is expected to obtain the major agreements with the party and go through the language or content of these agreements. Whether the list of supplier is maintained for regulated items or not. We have to check that for big purchase or purchase of basic items of raw material, there are some quotation process or not. Whether company is sending an inquiry for more than one vendor. The purchase order should be there for every type of purchase, whether it is small or big. Vouching for April, May, March for the year under review, and April, May for next year to be done. Copy of invoices, at least 15 to 20 to be obtained for various months for records along with a copy of GR receipt. Auditor should review whether relevant purchase expenses for sales made in March month are accounted for in books or not. Freight inwards should be checked very specifically in case of purchase related items. The rate process should be obtained, that how the management fix the rate or supplier to deal for the purchasing. Next item is salary. The auditor should go through the human resource policy and randomly examine the salary as per CTC structure, cost to structure. We have to check the TDS compliance and cross-examine the investment claim as deduction in the computation of employees' tax. If employee having the income from salary more than the taxable limit, then it is expected from the employer that he have to go for the TDS reduction. Whether personal department has maintained individually employee file, means user, if yes, check whether the file contained all the documentation of entity and another regulatory requirement for the individual. Each and every employee's performance or devotion or any other specific quality or noting should be maintained properly in the individual file of the employee. Whether salary is paid by cash or through banking channel, list out the payments made through cash. And if the salary is paid by cash, then auditor should suggest to the client that try to make all the payment of salary in form of bank channel only. Whether pay slip issued to employee shows the breakup of the salary and all the deduction over time. Proper contribution towards the PF from the side of employee and employer should be checked by the auditor. Is there any advance given to the employee? That should be adjusted with every month's salary, and proper accounting of this type of transaction should be accounted for by the accountant in the books of accounts. Salary sheet should be checked by the auditor, and all the component of salary should be verified by the auditor. If there is any steps in the company like higher level management, middle level management, or lower level management, then policy regarding these who pay the salary should be verified by the auditor. Next item, ESI, Employees State Insurance, PF, Provident Fund, Bonus, Contribution Funds. These items will also be checked by the auditor in a careful manner. Auditor should check Provident Fund, Employees State Insurance, Bonus, and Pension Act applicable to the company. For PF calculation, they have to verify the basic salary and allowances given by the employer to the employee. Auditor should verify the employer-employee contribution to PF and ESI and check the calculation rules. ESI, PF, bonus, contribution funds are checked by the auditor on monthly basis or yearly basis. The auditor should verify challans of ESI and PF or other statutory funds and trace entries in the books of accounts, and if possible then obtain a copy of challans for the ready reference purpose. They have to prepare the details of all statutory payments regarding the employee. You have to check whether the PF Act, ESI are applicable to the each employee or a class of employee. If any short-term employees are there, for example labor, then labor registered should be there, and regarding the deduction of PF or ESI should also be checked in case of these type of employees. Next item is legal cases. Regarding the legal cases, the auditor should obtain the list of legal obligations pending as of 31st March and check whether liability is required to be shown under the provisions or contingent liabilities. Contingent liabilities means uncertain liabilities. So any type of legal cases should be disclosed properly in the books of accounts. Next item, gratuity, leave encashment, other benefits, long-term. The auditor should check whether a provision is made for gratuity or leave encashment or other employees' benefit to provide it towards the employee at the time of their retirement or exit. If yes, then verify the basis on which provision is made. Auditor have to obtain the actuarial valuation report, LIC or actual calculation from the client, if any, and go through with the assumptions made by the actuary. Next item is full and final settlement. Obtain the list of employees who joined during the year and resigned during the year. Please review full and final settlement payable or recoverable properly disclosed in the books or not in case of employee registered before March, but full and final settlement is done post March. This is a cross-check examination by the auditor. Actuarial certificate. Please review the database provided to the actuarial for verifying data. For example, number of employees, level of salaries, increment basis, other actuarial exemptions. This will provide a great help to the auditor in his auditing work. Next item is finance cost. Finance cost means the cost of interest or expenses to raise the loan for the business purpose. In finance cost case, the auditor should check the apportionment of principal and interest amount as per loan amortization schedule. You have to check whether tax deducted at source under section 140 and 194 A has been deducted on the interest payment to NBFC or individuals or corporates. Whether proper entry has been made in the books of accounts regarding the finance and finance cost. It should be verified the company has charged other borrowing cost charged in finance cost. If company taken loan in foreign currency, whether applicable net gain or loss on foreign currency transactions and transactions taken in books of account. Means foreign currency transactions should be checked very carefully to find out the gain or loss on these transactions and translation taken into books of account. Regarding the borrowing cost, the auditor should check whether borrowing cost about capital expenditure adequately capitalized or not. Whether unutilized fund during the construction period of assets reduced from the value of assets should not be credited to profit and loss, because if so there, then it defeated the purpose of account. Interest accrued but not due up to 31st March should be accounted for in books, because it is in totally in a relation of finance. Salaries, increment, assumptions and other actual assumptions will also be checked by the auditor at the time of audit of a company. The next item is expenses. To check the expenses or verify the expenses, an auditor is expected list out the prior period expenses which are booked during the year. The auditor is expected to list out the expenses on which GST reverse charge applied, entered adequately in the books of accounts. So transaction regarding these should be there in the books of account. Checking of TDS compliances concerning expenses. The auditor have to prepare the list of expenses on which prepaid is made. Vouching of expenses should be there to find whether expenses are correctly signed, dated, marked with serial number, invoice wise, tax invoice type of to claim GST in. The auditor should list out of unsupported vouchers and ask management to arrange the invoice for that unsupported vouchers. Otherwise, such expenses cannot be booked into account or verified by the auditor. Personal nature, charity donation, club expenses will also be checked by the auditor. Examine expenses occurs regularly for the purpose of regular expenses should booked every month or salary expenses booked every month. These should be on the monthly recording basis. The auditor should examine whether company had made expenses due entry at the year end. For example, salary of March month booked. The auditor have to examine whether company passed expenses entries on a due basis. If company pass entry through bank or cash, then ask management to first due to the expenses entry. Regarding expenses, auditor have to check any expenditure of capital nature charge in revenue expense. Means there should be proper difference will be maintained by the auditor between capital expenditure and revenue expenditure. And if any fault was there in recording of revenue or capital expenditure, then it should be noted by the auditor and forwarded to the knowledge of shareholders or management. Check whether GST tax input claim on any expenses or no. Check such input claim in GST return in GST return 3B. The auditor have to identify the expenses which are disallowed under Income Tax Act 1961. And if there any limit or ratio is sanctioned for a particular type of expenses as per the provision of income tax, then it should also be verified by the auditor. Standard sizing ratio and another management ratio to be computed for analysis purpose. The cost of operation of the business, the cost of goods sold of the production or total production should also be verified by the ratio of total expenses. If any expenses is incurred to earn our income and expenses more than the income earned, then it should be noted by the auditor and discussed with the owner of the business or company management. There should be proper difference should maintained at the time of recording transactions between the direct or indirect expenses. Proper differentiation should be there for production expenses, for office expenses, for selling expenses, because expenses cover a huge part in the profit and loss account debit side. So item covered under expenses should be verified very carefully by the auditor to do the audit work in a proper or timely manner or effective manner. Next item is notes to account. The auditor should prepare the working of foreign income and expenditure incurred during the financial year for notes to account. Prepare the related party transactions during the financial year, and auditor have to be very keen view regarding notes to accounts. If there is any policy being changed by the business, then this point should be provided as a proper disclosure in notes to accounts. Let's talk about the conclusion of points to be taken by the auditor at the time of doing a audit of a company. An aforesaid statutory audit checklist is just an illustrative list, means the above topics, and more information documents may be added or removed based on judgment, experience, and legal requirement. So, by considering hypothetically these topics from balance sheet or profit and loss account, an auditor can go for the effective audit work of a company. Okay, thank you for this topic. Thank you. Thanks again.